Hey everyone, finally Indian government has taken a stand on crypto taxes, and in the union budget they have declared 30% tax on the crypto gains. I joined a Twitter space yesterday and people were talking about, well, this is too much. Some were saying this is a good first step. Irrespective, in this video, I'm going to break down example calculations for crypto tax that is applicable for past gains, present gains, and also TDS implications, exchange implications, and everything in between. So let's go and have a look at some example calculations. So let's first go through the four basic principles or the laws that have been announced. So as you can see, the number one is 30% tax effective from 1st of April 2022. This 30% tax will be on the income. Yeah. So whatever income is gained through any of the virtual digital assets, it will be taxable. Also, if there is any gifting going on, if I gift you some bitcoins, you need to pay 30% tax on any incomes that you received on those bitcoins. Secondly, 1% TDS on transaction value. That is very important here. So if, let's say, I am doing a transaction for buying Bitcoin or selling Ethereum for that matter, 1% TDS will be deducted on the transaction value. It's not on the income or profit, it's on the value. And I'll show you in examples how does that work. This is effective from 1st of July 2022. I think that gives some time for the exchanges to basically get the calculations logic embedded into their systems. Thirdly, no losses should be set off against the income. What does it mean is, if I lose money because of one of the bad investment in crypto, I can't then say that use that or deduct that losses from my income that I might have gained from other cryptocurrencies. And I will again show you with some examples there. And finally, we cannot carry forward any losses to the next fiscal year. So that's another important point. Okay, let's start from a scenario one. So first scenario, very happy scenario, that there is a person, he transfers from their bank. So this is the bank. And from their bank, they transfers 10,000 rupees to the exchange. Okay, so far so good. There is no tax, there is nothing in here. The first thing that they do is they go ahead and buy some Bitcoin for this 10,000 rupees, right? So all they have done is they've bought Bitcoin for 10,000 rupees. Immediately they have to pay 1% TDS. So 1% of 10,000 will be 100 rupees, right? So 100 rupees goes into TDS. And then second event that happened later on, let's say the Bitcoin prices go up and whatever Bitcoin they got, now they want to sell it off. So they are selling off. Yeah. And they're getting the money back into INR here. Okay. So they're getting the money in 20,000 rupees. Now what need to happen is two things need to happen here. Second A will be that they will have to first pay 1% TDS on 20,000. So that will be 200 rupees. Because remember, TDS is on every transaction, no matter whether it's a buy or sell, it's on every transaction. Okay. Though there is a difference, it will not be on any wallet exchanges. So for example, if you transfer this Bitcoin from this exchange to a hardware wallet, then there will not be any TDS, because that all you're doing is just you are moving from one wallet to another wallet. Okay. But now you sold it off, so you need to pay TDS on it. Point number B here, which is the 30% tax. So the 30% tax now will get applied on the income, and the income here is 20,000 minus 10,000. Okay. So that will be 10,000. So 30% of 10,000 will be 3,000 rupees. So the total tax that this individual need to pay will be 100 plus 200 plus 3,000. Okay. This is a very simple, happy scenario where somebody has earned some money and they will have to pay taxes. They will have to pay taxes on it. Okay, let's start with a scenario number 2 now. Okay, so scenario number 2 is that this person now knows that he's made some money in Bitcoin. He transfers another 10,000 rupees to the exchange. Okay, now this time what he does is, using this 10,000 rupees, he goes and buy Ethereum. Okay, so first thing will happen is 1% tax on 10,000 rupees. Again, the same logic here. So 100 rupees will get deducted as a TDS. Now let's assume here that Ethereum goes down. Okay. And the value now becomes 5,000 rupees. And this person panics and says, okay, I'm going to now sell off because it's really going down. So in this example, what has happened is first of all, he needs to pay 1% TDS on the 5,000 rupees, which will be 50 rupees. Okay, because that's the value, that is the transaction value at which the TDS will be applicable. The second thing that need to happen is now there is a loss here for him because he's got a loss of 5,000 rupees here, right? So there is no tax on this 5,000, right? However, as we learned in scenario one, he made a profit of 10,000 rupees, yeah. And now in the scenario 2, he made a loss of 5,000 rupees. So when he comes to file his income tax return, there is an argument here that should this loss be set off against the profit? So should he be paying tax on just 5,000 or should he be paying tax on this 10,000 profit? So this has been made really, really clear in the announcement that the loss cannot be offset against any income, right? So this loss is a loss. There is no tax liability on it. But in this example, the 30% tax need to be paid on 10,000. So the total liability for this person will be 3,300 plus now 50 rupees from this loss here and plus 100 rupees. I hope this point is very clear to you that the loss cannot be set off against any income in cryptocurrencies. That is where I think the transaction volumes might go down for a period of time because people might be scared that if they lose money, they are not able to offset it against the profit. Let's now go to scenario number 3. And this scenario number 3 is super important because I think this is where people are not able to understand this whole concept, right? So let's assume again that he sends 10,000 rupees to the exchange. And now this time what happens is he does the first thing, which is to buy any currency. Let's say he buy BTC this time, okay? And he will have to pay again 1% tax, 1% TDS, that will be again 100 rupees. Now what happens is Bitcoin, let's say, picks up and now the worth of Bitcoin is 20,000, right? Now he's not selling it off. He's not selling it off to make the money back into the fiat account, which is take the money account in Indian rupees. Instead, what he does is now smartly, he swaps it. This is what many people are saying. You swap the BTC and let's say you put it into USDT or USDC, which is the stable coins, which again, I can make a separate video on the stable coins and how do they work. Let's say he tries to put this 20,000 money in here. Now there are a few complications here, right? Number one, first of all, when he does it, he will have to pay TDS on 20,000 rupees again because he's making another transaction. So 1% of that will be 200 rupees if he's buying either USDT or USDC. The second point is the day or the date on which he is doing this BTC to USDT or USDC transaction. If the Bitcoin, he's realizing 20,000 rupees as such. So his income here now is 10,000. He needs to pay tax on 30% tax on this 10,000, although he's not taking this money into his bank account. It doesn't matter what you're doing with this money. If you're doing another transaction and trying to put this money in USDT, the day on which you're doing this transaction, you will have to take the Bitcoin price or the value. Now, there is no clarification. Let me clarify. There is no clarification right now from Indian government. This is how it works currently in US from a tax perspective. Although in US there is no 30% tax, there it is considered as a capital gain, which is what we will cover hopefully in the next sections. But the value that is being realized by this particular individual, they will have to pay tax on this gain as well. I hope this is clear. Let's move to another scenario, scenario number 4. Okay, in this scenario, what is happening is, let's say again the same example, 10,000, they buy Bitcoin. Okay, so they have to pay 1% TDS. Okay, so that will be 100 rupees. Now let's say the second thing what happens is the Bitcoin prices go up. And this time the Bitcoin price is 20,000 rupees somewhere. And what this person decides is, rather than, they are not selling it off. Okay. So they are not selling it off. They are not swapping it with any other cryptocurrency. They are not doing any swap. What they're doing, typically, this is what happens in US. You can go and buy, I don't know, you might want to buy a Tesla, for example. Okay. So you will use this Bitcoin to pay partially the Tesla. Of course, this can't really fulfill your Tesla needs, but let's say you go and pay 20,000, contribute 20,000 of Bitcoin, and remaining money you pay in cash, okay, or your debit card or whatever. Yeah. Now, again, as per the US laws, now this India has not yet given a clarification of how this will be dealt. Hopefully the details will emerge, but right now in US, as per the US laws, what happens is this 20,000 that have been used against this purchase, it is considered as a crypto gain, and therefore the profit for this person has been 10,000 rupees. So they will have to not only pay TDS of 1%, because again they have done an exchange of 20,000 digital value here, so they will have to pay 200 rupees as a TDS here. And secondly, what they will have to do is they will have to pay 30% tax on 10,000 rupees. So that will be 3,000 rupees. Although they have used this money directly to get Tesla, but it is considered as an income. That's what is happening in US right now. But in India, of course, the details need to emerge out, and these calculation logics need to be really made clear to the general public like you and me. Let's move on to scenario number 6. If you did like all these scenarios, please give it a thumbs up, just so that I know you are all enjoying this content. Now, scenario number 6 is very important. Again, people who have invested in cryptos from long time ago, right? So let's talk about them. So let's say, again, this is the timeline for 1st of April 2022. Any sell that happens for crypto in this time period will be taxed. After this time will be 30% tax. Now let us say somebody is owning crypto from 2019 onwards. Okay. And let's say at the time they got it for 10,000 rupees only. Okay. Right now the price for the same crypto is, let us say 50,000, because they have made 5 times of the money. So 5x is the money that they have made. Now if they carry on holding beyond this point, and let's say if they sell it here for 60,000, yeah, then they will have to pay tax on 50,000, because that's their profit. 10,000, 60,000 minus 10,000. So they will have to pay 30% tax on this value here. However, if they try and sell it prior to this date, then this duration is longer than 365 days. Yeah. So the first view says that they need to pay long-term capital gain. So as per the long-term capital gain, they will have to pay 40,000 rupees is their income. If they sell 50,000 before this, let's say 50,000 minus 10,000. Now they will have to pay tax on it. Now the tax on this that they will have to pay, it will be on 20% rate. So that will be 800 rupees. Sorry, 8,000 rupees. Okay, so that will be one view, that they need to pay long-term capital gain because they have held this crypto for more than 365 days. And as you can understand from a securities perspective, from equity market perspective as well, if you have long-term gains, then you pay a different tax versus a short-term capital gain. The second view again is the same view, which is that they should actually pay 30% tax to avoid any litigations. Again, both views are popular at the minute. We don't have a clear definition of what should be happening in this particular case. Hey guys, I hope you really liked the video, and if you found it informative, please give it a thumbs up. I'm not a tax expert or advisor, so please do your own research and do your own analysis. And if you like the video, please subscribe to my YouTube channel, because I'll be bringing more crypto, NFTs, and much more news